at the beginning of Blockworks, when we had no money and we wanted to do a bunch of hard things at once, we just said we can't do that now. We just I'm sorry, we just can't get to those things. Then when we got money, we raised a round, we were spitting off a decent bit of cash flow. We said we can do a lot of hard things, but we have to go hire lots of people. And now that there's Claude, and this sounds like overly simplistic, but it's like, if we want to do a lot of hard things, it's like a great take ownership of that thing, and someone goes and builds it in a day or two. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Oh, what's up, folks? Welcome back. We got January 22nd. You're listening to this on the 23rd or the 24th. We finally got the gang together. Santi, Rob, what's happening, guys?
Only took us 22
days.
Whole
crew.
Crazy.
Whole crew.
Crazy. Santi's been spending the first 22 days getting some like glorious rug behind him. Where are you, Santi?
I was in Davos yesterday, so I made my way down, stopped by halfway through there.
The global elite that you are.
Yeah, definitely feels like you're in the old continent. If you
the only people who hang rugs on their walls are people who have way more money than I do, right? Like that is the group. So
I will say, Rob, you have an interesting pattern, and we're public. I'm not doing any OPSEC stuff. You said you were moving to Miami. You kind of were, the billionaires tax, all this.
You're moving to Rob. You're moving to Miami.
I am not moving to Miami. I have a place in Miami for a few months, of which I am back and forth between New York and Miami right now.
He made sure to do the IRS.
And I'm not. I'm still paying New York City taxes. I will be a taxpayer in New York City in 2026.
Why would you be? Oh, in 2026. Okay.
Wait, in 25, last year, this year, every year.
Noted. I will say New York right now sucks. It's like 7 degrees here.
That's why I'm here. And you know what? It kind of sucks here. It's like raining all morning, 70 degrees, but it's like pouring rain. Hasn't been particularly nice, honestly.
I spent a week in Costa Rica, and it was lovely. And I was like, what am I doing in New York right now?
Well, you have a newborn, so unfortunately, you can't just pick up and move to Costa Rica.
That is true. Yeah, I know. I was like, oh, Dana, we gotta move here, and she's like, yeah, you have a child. We can't go to Costa Rica. So, Santi, you were talking about Slack before this. Let's I'd love to hear just how like maybe Claude and we did this podcast with Chow that I did solo, and it's now I think one of the most listened to episodes we've ever done in the history of Empire, which just tells me that I think people are really trying to figure out like how these tools are actually being used. And I'd love to hear either Rob, like you guys at Dragonfly, or your Portcos, what you're seeing like on the edges, Santi, you guys, or maybe you're not using it that much today. I can talk about Blockworks, but would love to just hear how it's impacted the orgs.
I mean, talking about like internally at Inversion, we're just talking. Rob and I actually talked about it in the last pod, and it is a priority for everyone on the team to like get up to speed constantly on AI. Everyone on the team across the board, and we are incredibly more productive. Like for instance, one of my analysts on the private equity side we're looking at it's a public company. It's not very well known, doesn't have research, there's not much out there. He was able to put like the amount of work that you can cram into a 24-hour period. I was like, this would have required a team of like 5 or 6 people. And at JP Morgan, we had an external army in India to do slides. And like, it's just incredible the amount of productivity we're getting out of on the engineering side, of course, as well. So, of course, we raised a round. You're thinking you're going to hire certain amount of people and you have a burn rate, but it's just incredible how much productivity you can get. We haven't, so Claude has not rolled out co-work on the enterprise side. I think it comes out tomorrow actually, but on the individual side, we've been poking around with it, but it's just incredible. Like every other week, the amount of progress that has been made now, it's just, one week you think you're mastering OpenAI and prompting, and then it's like, no, you got to transition to Gemini, and then it's like co-work. So we're getting a lot of efficiency gains internally. On the investing side, of course, like I'm paying a lot of attention to SaaS. Like it's been a massive disruption in terms of multiple compression there. Again, Rob and I covered it last time. There's a great tweet out there that actually I retweeted. I'm off Twitter, less active now, but there's a great tweet that says, adapt or die. Like SaaS is going from like EV to revenue, EV to gross profit, EV to EBITDA, EV to free cash flow. And of course, I couldn't resist the temptation to say that crypto trades at the very top of EV to TAM, and it's going to EV to revenue. But yeah, I'll pause there. But it's just been very dramatic, the re-rating that has happened in the public markets for SaaS companies. So I've been just paying a lot of attention to that.
Yeah.
If your business, I'm interested in what you're doing at Blockworks, but on the engineering side, if your business isn't writing almost 100% of its code today, AI assisted, you're probably falling behind, right? Even Anthropic is writing all of their code, they will tell you, using Claude, right? And so, they're dogfooding it.
By the way, I think there's a difference between writing 100% of your code with Claude and then writing 100% of your code with AI assisted.
Sure, I agree with you. So AI assisted, right? Like Claude itself is not going to write 100% of your code. You clearly need people, not today yet. So maybe at some point, and maybe for some businesses, but there's and you clearly need people in the loop in terms of quality checks and understanding that you're as you go through and make sure that you fix bugs, and for some of the more complicated problem solving at times, but not really. But it should be AI assisted today, and every single one of your engineers should be using it. And if you're not, one of the things that we've seen in our organizations is that, especially for, call it, some of the senior engineers, and they're a little more hesitant, I think, to potentially, use Claude or use, Copilot is not at the same level, but one of these types of AI assisted bots or agents. And what we've seen is you have to mandate it from management, right? So like, even in the non-technical management, like Yano, I'm interested to hear what you're going to say, but you probably have to be using it yourself to understand the power of it, to then go and actually require the engineers use it. And we've seen that across organizations as well. If the CEOs are using it, C-suite's using it, it's being adopted much more quickly by everybody else. And if they're not, it's still a push-pull at times by some of the staff.
Yeah, I would say there have been two enormous cultural shifts at Blockworks. One was COVID, which forced us to go remote and completely change how we ran the entire company. This is the second one. So I think we are starting to see a huge cultural shift since it was specifically Claude 4.5. Like, I think we're a pretty AI native org. Everyone's been using chat since the beginning, but it was Claude, it was 4.5 that really changed things. I think at the beginning, Santi, you mentioned we raised this money, we thought we were going to hire people. At the beginning of Blockworks, when we had no money and we wanted to do a bunch of hard things at once, we just said we can't do that now. We just I'm sorry, we just can't get to those things. Then when we got money, we raised a round, we were spitting off a decent bit of cash flow. We said we can do a lot of hard things, but we have to go hire lots of people. And now that there's Claude, and this sounds like overly simplistic, but it's like, if we want to do a lot of hard things, it's like, great, take ownership of that thing, and someone goes and builds it in a day or two. And that gives us the ability to assess if that V1 is good enough, or if we should scrap it, or if we should double down. And I want to actually show you guys an example of what this looks like. So our sales team, we have a 10-person enterprise sales team. We now have I built this out personally. It's the Blockworks Pitch Assistant. So you put in the name of a company. So I'll put in Maple Finance. Let's say the sales team is going to talk to Maple today. It looks at the whole website. It looks at all the company details. It has all the information in our HubSpot. It has all of our pitch documentation, all of our sales numbers, metrics, pricing. It's got our pitch deck. It's got all of our product information. And then it generates a whole talk track. And then it gives you objections that it thinks Maple will have. It's like, okay, well, if you're talking to Sid at Maple, I bet he's going to say this. If you're, maybe talking to someone on the growth team, I think he'll say this. How does Blockworks compete against, X, Y, and Z competitors? It gives you all the information here. So, and this is a tool that I built in an hour on Replit. You can do the same thing with Create a Proposal. If you post call, you can actually upload your call notes from Granola. So the whole sales team uses Granola. You can just copy paste the Granola transcript, put it into this, and then it'll do the same thing, and it'll actually generate a proposal for you. Again, the sales team should not read the pitch word for word. The proposal should not be sent to the client right away. You got to review it, but it's crazy how much time and honestly extra people this has saved us.
I will say what you said around like prototyping, like that time, if you think about like what needs to be done to reach a conclusion, it probably would have taken a long time. For us, like as we evaluate companies, like we're able to do analysis on so many companies very quickly. But I will say a lot of times at the very beginning, one of my analysts would come to me and say, I've created all this. And then I would ask him hard questions, and it nothing I still think on certain disciplines it will not replace the judgment piece. And there's just some things that you need to spend time doing yourself, whether it's writing it on paper or just looking at it. And I worry that I don't think it places more value. I was thinking like it probably places more value on judgment. And so for instance, Claude, I think it's AI assisted, but that engineer that like architected and like created the prompt, that was probably a 10x engineer that is now like a 100x engineer, because he knows how to architect. He has so much experience that is kind of letting the AI like write the code, which is not, it's like the Albert Einstein famous quote where he says like spend 90% of your time focusing on what the right question is.
Right.
And then 10% and the answer comes much faster. I think that like if you have that skill of judgment, of knowing how to prompt, or just have a lot of reps in you, like Rob, you understand the payment space so well that with AI, you can just probably not need an analyst, because you could just like use AI to like effectively be that analyst for you. But nothing really, I think today still replaces your understanding and knowledge of payments, or, you know.
Yeah, I mean, I do think that's true, especially for like complicated topics, but you can get up to speed on a complicated topic a lot more. Uh, I think especially in the Valley right now, people do, I think, undervalue experience, and they undervalue still just like ingrained institutional knowledge about like being able to understand where the potential, hidden issues are, right? Or where there might be, the question you need to ask to pull on a certain string to get to a certain value lever, or a certain type of, diligence area where like you can kind of start to understand some of the inner workings of business. Like I actually think like I use AlphaSense as well, which I in the past, I kind of felt AlphaSense was a little bit, wasn't that helpful. And recently it's gotten so much better where I'll say, okay, listen, I want to go and I want to understand everything that's been happening with interactive brokers for the last year. I want to understand, what they're thinking about in terms of, future strategy. I want to know how each of the lines of business are being talked about, whether that's publicly, whether that's at the analyst level, whether that's in kind of a quarterly earnings call from one of the CFO or CEO. I want to understand the lines of business, how they're growing, what the makeup of the revenue is, what the makeup of the EBITDA is, and how we expect that to grow over time. And it'll go back and they have this kind of this version that will take 10-ish minutes maybe, and it'll come back and it'll probably give me the single best sell side research report that has ever been written about interactive brokers, and it'll include everything I possibly need to understand that business. And yeah, if you read that and you don't have any kind of context or knowledge already, like you're not going to really understand the kind of some of the main points. But if you already have that institutional like level of knowledge and context, like that is all I need to get up to speed on a new company today. Right. And it's incredible like how much time that saves you and how much manpower that saves you.
Rob, maybe a counter argument to that would be like, there is a fine line between being too much in the weeds and analysis paralysis. Like Soros, some of the best investors would tell you, I don't really need to understand everything about the company. I just need to understand what the market sentiment is and like have a very strong point of view. And sometimes it hurts you to know too much. I wonder like what would the next Soros or the next Druckenmiller, like they probably would tell you like, we don't need to know everything, but this could allow us to be way more effective.
Well, Druckenmiller, what's the quote, right? You buy first and you research later.
Exactly.
Right? But again, these guys are more traders than they are like long-term fundamental investors, and they're macro guys as well, right? Depending on who we're talking about. So I think it really depends on your investment style, time frame, context, all of that, right? But when I'm doing an investment, I'm not actually investing in public companies, right? I research public companies as a corollary to, or for me to think through like how my companies, which are earlier stage, high growth technology companies, can potentially go after traditional markets. And so it's more about me understanding those markets and how these, traditional incumbents are thinking about, the IBKR example I gave specifically because I've just been thinking about it because they've been talking about prediction markets more.
Yeah.
Right. And so, but I think it really depends on the type of investor you are.
Yeah, and I want to ask you a question because I think you're pretty up to speed on AI. Like you poke around on the weekends, you build stuff. What is something that you've changed your mind on recently about AI, positive or negative?
I think that I always thought that as companies, there's a couple things. One is I think I thought of the connective tissue of a company as being like an ops layer, and like you got to get people to, as companies scale, you need this like connective tissue. And I think what Mike and I have both realized recently is adding people to be the connective tissue just adds an extra layer of people, and you can use AI to basically be that connective tissue. So that's how we think about it at Blockworks. I think another thing I recently changed my mind on was I thought memory was going to be an extremely good lock-in for the platforms. So I thought once you went really deep with chat, like ChatGPT, you'd be locked in because it knows all my health data and it knows everything about my personal relationships and knows everything about Blockworks. I have found zero memory lock-in. I'm now completely off chat. I was all in on ChatGPT. I didn't use Claude or Google or even really Perplexity that much. And I haven't used chat in about 2 weeks. I'm 100% on Claude now. So I think it's made me think about the lack of lock-in for these providers and like where they'll sit in the stack. And will you even ever go to Claude? Will you go to all of them? Will you just go to these like things that sit on top? And yeah, I think the memory lock-in was way weaker than I thought it would be.
I'm still using ChatGPT, Gemini. I'm using Gemini the most at this point. Still, I've used ChatGPT a little bit. Claude Code. I've been playing around with that, but I haven't been using Claude as much otherwise. I don't know. Gemini feels to me still like it gets me the right answer quicker. And I will say today, it feels like Gemini gets me the answer more robustly, more deeply. It seems more thoughtful than ChatGPT by almost 100% of the time.
Yeah,
Like
Gemini's better. I think Gemini's better for answering just like questions. Like, hey, what is this thing? I think Claude is now the best for projects. Like, hey, I want to build this sales ops tool for the sellers to like do this. And I also think Replit, which isn't talked about that much. Like Replit is an incredible tool as well. So that's what I would say.
Yeah.
Can you on Replit you can bring any of the foundational models in, or are they using someone specific? Okay.
Yeah, exactly.
Yeah. What do you can you say a little bit more about the connective tissue, because that's something I think about a lot. You've heard like I recently hired this guy from like Palantir. He used to work at Palantir, and he was telling me, look, for the first but even for like right after the IPO, we still had a super flat organizational structure.
Yeah.
And we didn't have OKRs. Like it was just super, like just fast sprints. And the Airbnb guy talks about like not ever having like one-on-ones. Like how does AI fit in that? Like, because there's still we're still humans at the end of the day. Like, so like when you think about like leading a company like Blockworks, you and Mike, like, what do you mean by the connective tissue being replaced by AI?
Yeah. So here's like a place where you need connective tissue inside of an organization is between finance and sales. There's like a lot that happens in between finance and sales. Discounting. Hey, this client wants to do a two year thing. Like, can we discount? Hey, my sales commissions are going out. Hey, there's this custom deal. Like, am I going to get paid on that? Hey, there's so much that happens between sales and finance. We're now using a tool called StreamOS that just automates basically everything between sales and finance. So what traditionally companies do is, and I think StreamOS is built on top of like all of the models. So it sits on top of mainly, I think, Chat and Claude. So instead of what you would traditionally do is hire a revenue ops team, a rev ops or a sales ops team. And then that adds a person that the team has to go to. Hey, it's, commissions are sent out on January 31st. Like, are my is this included in my commissions? And then the rev ops person has to go to finance and be like, hey, finance, like, this seller's at, it's all in StreamOS now. So I think there's different platforms like that.
There was somebody on, I blank on who it was, on TBPN, maybe it was end of last week or earlier this week. I think it was earlier this week, who said, large portion of these like large tech organizations has been people who can essentially translate between like product and technology, right? And translate between those two parts of your organization. And now essentially what Claude is doing is it's doing that for you, right? You no longer need that translation layer because somebody in product can just tell Claude what they want, and then they can go and do it, and Claude can help you build it. Yeah. And you need some tech and some software engineer to go and make sure that it's right, and to utilize AI to build this thing. But it's doing basically most of that translation for you today. And so this whole like translation layer that exists in these tech organizations is probably just going to get completely hollowed out over time.
So Rob, what is the role of a VC when, like, we talked about the cost to start a company went from like 1990s, like millions of dollars. Software as a service lowered that dramatically because you didn't have to, like, pets.com went bankrupt because it had to spend millions of dollars to do what effectively costs zero today, spin up a website with Squarespace. And now you can do that even vastly cheaper. What is the role of venture? Like, if you take a super cynical view here, it's like, are we at a point where you're going to see the second order effects are way more innovation, way more folks starting their own companies because now they can prototype and they can build apps. And what has been probably the biggest barrier to innovation and entrepreneurship has been stop being capital for a long time. And now is like probably more like technical expertise. Like if you didn't know how to code, I was like, like I need to have a co-founder that is technical. Now you could argue you don't. And then, like, what is the role of VC in that world? Like, how do you think about your edge and like the value that you bring to the table for entrepreneurs when you have all this access?
Yeah, my belief is that, and I know I disagree with some people on this, but my perspective is that what's happening in AI is not displacing people in terms of, there's still going to be a lot of workers. There's still going to be people who they need to have jobs. They're still going to be inventing things. There's going to be more businesses. There's going to be more innovation. There's going to be more people trying new things. There's going to be a significant amount of more productivity with any single individual. And there's going to be, we're going to have to put a lot more emphasis on creativity and ability to sell and distribution and, the business aspects, the intangibles of, those founders, because what's going to get commoditized is the software engineering, right? That's the commodity now. It's no longer that is the edge, right? Oh, this is the best software engineer I've ever met, and they're going to do something better than somebody else. That's going away, right? And so people are just going to be that much more productive. Yeah. And so for VCs, that means that there's going to be a lot of things to fund. We also, most likely, there will be businesses are getting bigger, right? We're going to have $1 trillion IPOs in 2026, right? We're going to have multiples of them, right? This is going to continue to happen. And we're also seeing I think we're seeing a resurgence of, funding of hard assets, right? Yeah. Or of hardware. And that's not my business, right? But we're going to see, we're seeing all of the large, platform VCs, kind of lean into that as well. So I don't think there's a dearth of capital to put to work. And I think expertise, to our point earlier, still matters. Knowledge and expertise are not the same thing.
Yeah. Tell you the truth, like,
one note on that, Santu, to answer your question too, is venture will move away from the thin software layer, right? Simple workflows, another enterprise SaaS tool. And I think venture will get even more important actually in like, let's call it 4 buckets. Fixed costs or high CapEx, scarce or privileged companies with scarce or like privileged data, people who have like extreme distribution moats, and real world execution. So CapEx, fixed costs, this would be like, I don't know, anyone from like NVIDIA to, I don't know, Grok or any of the big,
any of the models,
like any of the model companies. Distribution moats would be like or scarce or privileged data would be like, I actually think there'll be a bucket of enterprise SaaS that does. I know there's the chart that Chamath posted of enterprise SaaS is falling off a cliff. I think I think that'll divulge. Like, I think everyone's bucketing all SaaS together right now.
Yeah.
There will be a bucket of enterprise SaaS that does extremely well. And if they own the distribution moat, if they have basically scarce or privileged data, or they own the distribution, and they are the system of record for a company. So the people like this who will do well is like Rippling. Like if you own the payroll data, the HR data, your whole company, Salesforce, HubSpot, ServiceNow, Oracle, those guys will do well. Who won't do well is like Monday.com, Asana, like just this thin SaaS layer. And then real world executions like robotics, hardware, climate, energy, logistics, like anything where like atoms and safety and like basically dominate the cost stack. So
yeah,
there's a lot of conversation right now about basically the hollowing out of like middleware.
Yeah.
Right. And I think like that's probably right, depending on the vertical in the industry. But there is going to continue to be, I think, a somewhat of a data moat and a distribution moat, especially for, very, to your point earlier, Yano, about there's no lock-in right now with any of the chats. That's not going to be true on the business side. Like there is going to be lock-in because people are going to integrate proprietary information into then something that they're fine-tuning over time. Right. And so we are going to see lock-in on certain types of businesses. But to the point again, like we were talking about, okay, there's all these people, so many people work at large organizations that exist to just answer questions, right? There's whatever. So Salesforce is in every single company, or many, many large companies in the world. It's basically a CRM software. And a lot of people are employed at companies that are basically answering the question, what does Salesforce say? Like where, what does our pipeline look like? Where are we in the pipeline? Who is moving down that pipeline? How is our success rate? Like, what does the funnel conversion look like? What do we expect revenue to be over time? And that question can now be answered by, a model, right? That question does not need two people on your finance team now to do that question. And you don't necessarily need Salesforce in the same way because you just need the data, right? And so that's the type of stuff I think is going to be really disruptive.
Just to round out this conversation, I think it was Andy Jasper, I think it was the COO of Amazon said, hey, look, no surprise, like Salesforce like has it's not very custom. It's just kind of like there's all this training that needs to happen when you're onboarding in your team and training your team to use a solution that is a lot of it out of the box, because SaaS would rather sell you out of the box software, not super customized, because it's a professional services just blows up and it's a lower margin. And I think it was the CEO of Amazon that they built their own CRM. And he's like, honestly, better for us because it's like way more customized for our needs. And so if a company of Amazon that scale, I don't know if it totally replaces Amazon, but I think Salesforce, but it definitely begs the question of like, I've interacted with Salesforce a ton. It's not as customized to like your needs. Like we're using it at like Sage and you're like, shit, man, like this is all these unnecessary fields. It's not really relevant. So I think I actually don't necessarily agree with you, Yano, that like Salesforce unless they change their pricing or their type of business model or really want to like re-architect and like be more customizable for clients, I don't see that much lock-in, to be honest, for something like Salesforce. I do think if you own data, then that's a real moat, especially like that will continue to be a moat. Salesforce, I don't necessarily think the lock-in is there as much.
Okay, here's how I think about it. If you want, there's a bucket of things that your team does, right, Santi, that like that AI will end up doing, like an agent filling out notes from a user's client. Aaron Levy, who's the CEO of Box, had a great post on this. He called it non-deterministic systems. You want AI agents doing the non-deterministic thing. So an agent filling out the notes from user client meeting, generating a sales presentation for a new customer, answering a customer support ticket, doing research, providing analysis on a set of documents. That's all non-deterministic work that an AI agent can do. But if you ask the agent to generate more outbound emails, create the sales presentation, create the pitch, send the follow-up email, that all of that has to pull from somewhere, right? It almost certainly pulls from some sort of CRM system. So like when an agent processes and reviews like invoices and transactions, like they have to kick that data into a system. So there's some system of record that will do well. I think your point is, well, Should I just build a perfect system of record for inversion?
Yeah, like if you can export, but if you can export all that data and you can pack your stuff and just plug it into a model and say, hey, listen, here's our Salesforce instance. Build me something that, optimizes for across these different things. I think you could do that. I mean, that was the whole point of the Amazon guy.
This is why businesses like Databricks are going to continue to really do well. And Salesforce doesn't necessarily need to, because with Salesforce is more of a layer to help you understand what is happening versus like the system of record itself, right? It's a translation layer, right? And so I don't necessarily need the translation layer anymore. I need the data layer. I need the data indexing. I need the data lake, but I don't necessarily need the translation layer or the translation software anymore.
Oh, I think I disagree. I think Salesforce is the system of record. I would disagree. We should talk crypto at some point. Let's
all right, before we do that, we need to make a bet. So, Rob, are you taking a long Salesforce, like short Salesforce? Yana, are you taking long Salesforce?
So, I mean, Salesforce is a system of record. I just want to make that point for him on like a lot of customer data, but it doesn't need to be, it's a system of record that then translates for you. The thing is, you don't need a lot of what Salesforce does. So it shouldn't cost you as much because the value isn't as high. Right?
Correct.
Yeah. Okay. That I agree. That I agree with. But that's a business model question. You're talking about the business model of software that will 100% evolve. Like the seat-based model is horrible. Seat-based model should go away immediately. It should all go to usage-based. Like anyone who's people should really use Replit and see how Replit is charging. It is amazing. The more they charge me, like they'll be like, I'll do a task and be like, all right, that task costs you 14 cents. I'll do a bigger task, walk away from the computer. It works for like 30 minutes. They're like, hey, that task costs you like $6 and 17 cents. Like, okay, this is clearly where it's better for the customer. So that's where it'll go.
We're moving on. Before we do that, ladies and gentlemen, please click on the link below. If you want a referral link to Replit, Yano, on
they should really be sponsoring. I've never talked to them. Do you want to know the craziest? Okay, the other crazy thing is I've never talked to Replit, and no one in Blockworks has. They don't have a sales team, and we're still. So that's also how enterprise SaaS could change too. Coinbase crypto-backed loans powered by Morpho empower users to borrow up to $5 million using Bitcoin or $1 million using ETH as collateral. Loans originate in seconds with no additional credit checks and competitive rates, typically between 4 to 8%. Use USDC for down payments, debt refinancing, unexpected bills, and more. Repayment anytime with no fixed deadlines. Over $1 billion in loans have been opened through Coinbase to date. With the Coinbase app, you can manage crypto-backed loans with ease. To learn more, click the link in the show notes. As always, investments in blockchain technology involve risk, terms, and conditions apply. Anyways, let's talk about Clarity. This is a crypto podcast after all. So the House passed its version of Clarity, which is the market structure bill. Senate Banking Committee was preparing this markup. This is kind of what I know. They're preparing a markup based on this like heavily rewritten draft. There's a lot of like debate over tighten rules on stablecoin yield and interest. And on the eve of the markup, basically Coinbase said that they could not support the draft as it's written. Company formally withdrew its support. I think in response, the Senate Banking Committee postponed the markup and said there's broader work that needs to be done on the market structure bill, and we're going to delay this for weeks or maybe even months. What I'm
just to clarify there, the banking committee put out their draft of the markup. The ag committee was also supposed to put out a draft, and people had originally thought the ag committee was going to be probably the one that was more likely to make it out of committee and be the one that was going to take, or at least be the more influential version. And after the banking committee draft came out, Coinbase came out and said, hey, we cannot support this. And so then the ag committee postponed their new draft because of the yield piece specifically. And now it's been about a week and they haven't come out with their new draft. I've been told that maybe the ag committee draft was supposed to come out next Tuesday, but now people are worried about this historic ice storm that is coming across the US and that might push things as well. So we might have a few weeks, past when their draft was supposed to come out, which if anybody knows anything about Washington, losing momentum is always a bad thing.
Yeah. So I was in Davos and I was on a panel in the CNBC house with the head of policy at Coinbase. and he said, anyone that is not familiar with regulation says every bill that is passed dies 3 or 4 times before it gets passed. So this is kind of normal. In that same conference, Brad from Ripple was a bit more critical of Coinbase's kind of stance and saying, listen, more of the tune that I don't know where you guys sit. You could argue, hey, listen, we finally have an administration that has, put its best foot forward. Like, it's still progress is progress. Take the bill in its current form. It's still a win for the industry. Like, don't jeopardize, don't miss the forest for the trees. I will say, like, the point that I think Coinbase makes, and I'll just kind of reiterate, but you guys fill in. But there's a couple. I think there's one key issue here for them, which is kind of stablecoins that would probably hurt them to be less competitive. This idea of, effectively the bill in its current form would eliminate rewards or yield.
Mm-hmm.
Of course, we've always understood that like stablecoins can't offer yield, but like Coinbase kind of gets around with that with the rewards. And so it's just kind of a very, it's more of a mechanism. But obviously, you think about that is impactful for them because they want to continue to be competitive. Like offering rewards to users for parking more stablecoins has a direct impact to their business. So that's, in my opinion, like probably their biggest issue with the current bill. There's always some ban on like tokenized equities, so that obviously continues to be a huge kind of point. There's some stuff on DeFi that I don't know if you guys understand as well, Rob.
So I don't think there's a ban on tokenized equities. What there is there's like a study that has to come out, and like how, yeah, right. Listen, I think in this draft, clearly Coinbase is concerned about the yield on stablecoins, and if you read the language, what it essentially says is you can't give yield on stablecoins if yield is, or if the stablecoin is just sitting in a wallet, right? But you can give yield or rewards if it's tied to them doing something, right? So whether it's using the platform or transaction volume or whatever. And so most people looked at that and were like, okay, well, this is fine. Like, there's a lot of ways to build our business around this. Now, part of the issue is that it's so opaque that, there's going to be a bunch of rulemaking after this law is passed, and you can drive a truck through these definitions. And so, like, I think people are worried about, kind of this slippery slope. Coinbase, I think, is specifically worried because of the fact that they have this like new line of business where they're going to, allow you to do like a white label stable coin. Underneath it's going to be USDC, and USDC is just going to sit there as a deposit probably. And because they have this rev share agreement with Circle, which actually gives them 100% of all USDC revenue that's in on their platform. I think that's probably what they're focused on most closely, because they expect that to be a huge line of business. And then obviously today, like, they gave you a few points for just like, parking stablecoins there, but like there's very easy ways, it seems, based on first reading, to kind of work around that. And so I think people were surprised that Brian would come out publicly like that instead of engaging in the normal course, which was, to go and talk to the senators and say, hey, listen, like, let's, negotiate something. And one of the things that, it's clear when you talk to, the staff who actually write these bills, is they much prefer, and they're usually much more amicable if you engage with them outside of the public sphere or public eye than if you do things through public. Like, usually you want to be, that's like a last resort, right? And so it really threw this draft into a bit of disarray because he did that.
So where did Coinbase probably has the biggest presence in Washington. It seems to me like they were caught off guard in the latest kind of draft of the bill. What's behind that? Like, is it the banking lobby that obviously, like, why were they caught off guard? Because their whole point, I think, was we have like a couple of days before this goes vote. Like, we have to take an extreme measure of going public. I don't think their policy people and lobbyists like disagree with what you're saying, Rob. They just took an extreme measure because they were kind of blindsided, felt like.
I don't have the apparatus. We don't have the apparatus that like a Coinbase does. And so my experience in DC is not, nearly what a lot of these people have. What we have seen though, is that like even the most well-connected lobbyists and a lot of the apparatus years, they don't exactly know where things are going to land until they actually come out. And so like you can kind of get the wins, and you have certain, relationships that allow you to understand where, certain senators or, one side of the aisle is thinking about a topic. But, there's a lot of deal making that happens, in these committees and in Congress that you're just not going to be privy to until the very end. And so you might know which way it's leaning. You can kind of, tell the wins, but you don't know exactly till the end. I mean, the other thing I think people were really surprised about here, and I think the more problematic piece more broadly, is that this draft basically shifted a lot of the onus of regulating crypto back to the SEC from the CFTC. So the CFTC was kind of more of the focus in the Clarity Act, and I think the Ag Committee version will also probably be the CFTC primarily. And there's a large concern that if you just say, okay, well, like, here's a very high level bill, and then we'll leave it up to the SEC and the Treasury Department to think about how to regulate this over time, that there's just going to be a bunch of whiplash, right? Because we'll get to, the SEC was a lot less friendly to crypto, and then they'll kind of change their position, and that just won't cement the rules that we want in place. And I think that's probably, in my mind, the biggest concern, as we need more enshrined in law, and we want the CFTC to be probably the default choice to be the regulator here.
You're the political expert here, man. You've been fairly quiet there.
I was getting messages about BitGo, which I now want to talk about. BitGo is the first crypto IPO of the year. So I was looking into it, doing a little prep for the next session, So yeah, I want to talk about BitGo. BitGo's been around for what, I think they launched in 2013. Like, this is Belshe's been at it for 13 years. Obviously started as a custodian, now kind of this full stack institutional offering. They've got tokens, they do tokenization, trading, lending, borrowing, custody, and yeah, they IPO'd at $2 billion. So I don't know if either of you guys have looked into it or have thoughts.
I was thinking about Galaxy's back. Like, what is Mike Novogratz thinking right now? Because they had an offer to buy. They were going to buy it. Then I think it was right around the time Terra collapsed, I believe, or FTX.
I think it was a $1.2 billion deal. That was
$1.2 billion deal. Yeah. Do you think, obviously we ended the year 2025, Figure and Circle were some of the best performing. I think Circle was the best performing IPO of the year. Where do you think BitGo trades from here? And I can almost anticipate the analysts saying it's not a defensible business model. Like, there was a lot of criticism about Coinbase having that issue as well on certain line items and fee compression. Does it deserve to be a standalone company? Can it be a $10 billion plus company? And if so, what's it going to take to get there?
I mean, I have a really strong opinion on this. So I don't know.
We'd love to hear it, Rob.
Yeah. Okay.
Do share.
You should, Rob. Let's unshackle you from the dragonfly compliance.
Yeah, this is one of those ones. I was at a dinner last night, and to preface this a little bit, and somebody who worked at a different company in crypto yells across the table and was like, "Do you have a problem with this company?" Because they had heard me say something somewhat negative about about their valuation on this podcast. And so I got a little shook by that, because I don't want people to think that I don't like them, because this is not in any way personal.
This is such an amazing way to tee up your negative take on BitGo. So just hit us with it, Rob.
Which is
going to zero.
I just don't see how the business is worth $2 billion. So, listen, it priced in the middle of the range, so they priced it from 1.9 to 2.1 was the range they put out. They priced about 2 billion exactly. It was almost entirely hedge funds in the book, which that tells you a little bit about where the fundamental long-term investors think about this business. They were oversubbed, but that's pretty typical. This is a business today that it priced at about, call it, I think about 6 times what they expect 26 net revenue to be. It's on an EBITDA basis. This is, a very, very high multiple. I think they did 30 million of EBITDA last year. They'll probably do, I think some people think they'll do something
50.
50, 60 this year, right? And so, we're talking about a 40 times EBITDA type business, right? And all of the story here is actually not BitGo specific, right? So it's okay, well, there's going to be stablecoin proliferation. There's going to be a more real world assets. There's going to be this significant uptake of tokenization and these platforms like BlackRock and others now trading different types of tokenized assets, and all of that will be good for this custody business, right? And all of that I can agree with. But if the entire story around this business is, hey, we have fee compression, we have margin compression, we're probably publicly accepted as the third best tech of the three big custodians, and significantly behind Anchorage and then a little bit behind Coinbase, and we are going to ride the wave of the market, then the investors are going to sniff that out. And if they want exposure to these secular trends, they're going to go to the better asset, right? And so in my mind, this thing trends down to a more typical EBITDA multiple, and the chart probably looks less like Circle and more like Gemini.
I'll take the other side of that. Other side of this is going to Circle. I mean, we remember how much Circle ripped. Do you remember how much everybody was just destroying Circle's business model for being, an archaic stable coin that has only one product and revenues are going to go down? If you look at BitGo's numbers, yes, the multiple's a little high. I get that, but their assets under custody grew 100% year over year. Their trailing 9-month revenue grew 65% year over year. They've got a run rate of I think almost 250 million by the end of the year. That's up 85%. And these numbers are actually greater than Coinbase, right? Coinbase only grew AUM by 60%, net revenues by 45%. So I think if you look at the growth rate of the business, yes, the multiple's a little high, but multiples should be high when you have 100% year over year growth, as opposed to something like maybe a Coinbase or someone else who's like maybe they're growing at 30, 40, 50% a year. So I think you can actually justify some of the elevated multiples because the growth rate, and also if you look at the percentage of their revenue that's quote unquote sticky revenue, it's like, I don't know, 70, 80%, whereas Coinbase's sticky revenue is somewhere around like 40%. So they also hold this is not a reason to buy BitGo, but they hold a stupid amount of Bitcoin on the balance sheet. I think it's like 2,500 Bitcoin or 2,300 Bitcoin. So yeah, Bitcoin goes back up to 120, 125. Like, it's a nice little play there.
So the difference with Circle though, right, is Circle is a scarce asset. It's a unique asset, right? So everything that everybody said about Circle's just financial profile,
but it got long because it's the stablecoin play.
It's a scarce asset, yeah. It's the only way to get pure play to stablecoins, which everyone agrees is kind of one of the technical revelations of the last couple of years. Crypto custody, you can already get exposure to that through Coinbase. I expect we'll get an Anchorage IPO at some point in the next year or two. I don't think there's anyone. While Anchorage is a smaller business today, there's a general belief in the market that Anchorage has better technology and is more secure. And I think you can debate more about Coinbase versus BitGo, but Coinbase probably has a better reputation there as well. And so I agree that if crypto does well, tokenization does well, stablecoins do well, this stock will do fine as well. But on a relative like pair trade, I would expect it to do a lot worse than these others, right? And I think a little bit of what we might see here is probably somewhat similar to what we saw last year in the exchange space as well, which is that we got a few exchanges that came out, right? Coinbase traded well for a big part of the year. And then, Bullish came out and did pretty well. And then Gemini came out, and Gemini was the only one that did poorly, but it did poorly because now people were comparing different assets, right? They had an ability to do, okay, I want exposure to this, and now I have multiple assets where I can get that exposure to. It's different when you have a scarce asset like Circle.
So I will say I do agree on the technology. What was the last round for Fireblocks, by the way, on the private side?
8 billion, but the secondaries have traded significantly below that for
years. Like 2 billion-ish, I would say, between.
It never got down that far, but yeah. It's it was significantly down.
And there's not that many sellers, I think. Also, the saving rate. I mean, I think I go back to my initial assessment. I think custody as a standalone, like it's still primarily a custody play, and that's not as exciting for the market. To Yana, to your point, like if all markets are just momentum and skewed heavily towards momentum, I struggle to see that bid, just because it's a more boring business. If they can somehow convince the market that it is something more than custody, you don't see like folks getting super excited about BNY Mellon. Yeah, it's just. But I wouldn't necessarily buy it. It's just I struggle with the defensibility of it. Like what is the real moat? And I don't want to play short-term games around like, hey, maybe it's an acquisition target. Maybe the more interesting question is like, if it trades really poorly, it goes below $1 billion, does it get acquired by a legacy player that wants to move into
like a
crypto?
State Street or a BNY?
Yeah. I mean,
I think that's 100% right.
Yeah. I'll just say.
No, I mean, so like, who was it? It was Matt Siegel from Van Eck, who kind of put out a bullish, hey, we want to buy BitGo argument, and almost the entirety of his argument was about the market, not about the business, right?
No, that's
and
not
so
true. I got a lot of the numbers I pulled were just directly from Matt's tweet.
Yeah, he talks about the numbers, right? And then he talks about all of the bullish catalysts none of them are BitGo specific, right? All of the bullish catalysts are stablecoin proliferation, tokenization. Yeah, right. And so when I see that, I have a natural aversion to that business because, and some of this is because of the type of investor I am versus the type of investor he is. But you want to buy, in my mind, the best asset. You always want to buy the best asset that has access to some sort of secular tailwind. And so the secular tailwind might, be a rising tides, everything does well. But I think it's pretty clear that there are better assets to get exposures to stablecoins and tokenization.
Yeah. On the business side, it's very simple. If you're going to have another $1 trillion or $100 billion that need to be custodied, where are they going to be split across Coinbase, Anchorage, Fireblocks, BitGo, someone else? And if the answer to that
if you look at the ETFs, right, all of the ETFs use Coinbase, all of them. That's
right. What do you think the sum of the parts for Coinbase is on the custody versus trade, like retail, institutional? Like if you were to do a sum of the parts at Coinbase, how much of that value, 65 billion, is attached to their coin custody business? And can you actually untangle that? Because I would say a large part of their ability to win business on the custody side is because they do so many other things that BitGo is catching up to, but it hasn't been the in people's minds, both retail and institutional. It just becomes an easier argument to say, hey, you're already trading here. Why don't you just kind of deposit more assets here? And you can also earn, for me, the funnel and the ability to convert customers is easier for someone like Coinbase relative to some of the other pure play custody folks. And moving upstream is a bit harder when you also have like legacy players moving in that have way more distribution. So I see very little defensibility on the business model on pure play custody or majority custody business. I just don't think that this is a commodity in my mind.
I don't disagree with you. Like I 100% agree with you. It's a core piece of infrastructure. It has to exist. They were one of the first ones to do it. They deserve all the credit in the world for that. And in terms of winning new business, they're behind Coinbase today. But around the people who really, really care about security, user experience, they're behind Anchorage. So Anchorage is a smaller business today. Coinbase is a bigger business. So they kind of sit in between the two. Personally, my expectation is that from custody alone, they're probably the smallest of the three in 2 years.
Here's what I'll say. Don't bet against Belshi. That guy's like, he's just survived, he persevered and survived. And like, there's so many times BitGo could have died and so many times that people are like, oh, they're like third place. They just persevere. And yeah, if they're not as big as Coinbase, yeah, probably not going to be as big as Coinbase, but like, I don't know. I think that business will just do well. Let's move on. You guys see Polygon bought 2 companies, CoinMe and Sequence. I thought this was really interesting, very, very interesting. So this is, I think, the first time that a chain is now using capital to make acquisitions. And I do wonder if we're going to start seeing this more and more. So Polygon bought 2 companies, CoinMe and Sequence. I think the rough dollar amount was around $250 million. So pretty decent sized acquisition. This gives them the ability to have regulated money movement in 48 of the 50 states, fiat on and off ramps, 50,000 fiat to crypto locations in the US, easy onboarding with wallet infrastructure, one-click crypto transactions across many chains. They're calling it the Polygon Open Money Stack. And I think there's two interesting takeaways here. One is that you have this general purpose chain basically deciding to go all in on one thing, which is payments. That's an interesting thing for me. And then the second is, using, Santi, I think you've talked at length about like, what are these guys doing? Like all these protocols doing, just sitting on these ridiculous treasuries and mismanaging their treasury capital. I don't actually hate this. You gotta find something to do with that capital. And I actually kind of like this strategy by Polygon, by picking a lane, trying to own a niche, and using some of their they have a lot of capital, using that to make some strategic acquisitions. But Santi, Rob, tell me what I'm missing here. What do you guys think?
I mean, I don't think you're missing anything. Like, listen, this might be the first time that the public looks at Polygon and they're like, oh, they're really leaning into payments. But the reality is, like, they've basically decided, other than Poly Market, that payments is going to be their main focus for almost the last year, right? They launched Katana, I guess, in May, was it? And the idea was they could do like interoperability between very focused chains, like there would be a DeFi chain and a payments chain, etc. But they decided over a year ago that like Polygon was going to be focused on payments, right? And they've had this, really deep kind of integration in places like India. They've got flows happening in places like Latin America. They're doing a lot of the remittance flows from Revolut are happening on Polygon now. They've done really good BD there. And so this was somewhat of a coming out moment, I think, but it's been, a year's worth of or longer strategy to focus on this. And so they've been doing a really good job. And I think they looked at what, the opportunity set that Tempo and Arc and Codex and Plasma and all of these guys decided or saw, a while ago over the last few years. And they thought, well, why couldn't we use our war chest to go and do this ourselves today? And so they get the MTLs in the US, they get the business, they are able to directly interface with these customers now, and they're able to drive flow to Polygon. There's I think a very interesting question still about like what this means for the value of the token and how it drives value there. But in terms of building a sustainable business in one of the, fastest growing areas of our space, like, I think it was a smart move. And I think it's a continuation of what they've been doing well.
Let's not forget that they hired the head of crypto at Stripe, Josh Egan, last year. So that was obviously John Egan, sorry, not Josh. So I think they're smart in recognizing that payments is like there's a lot of efficiency there. And again, Polygon is one of those that does not get enough credit in the space. It's not in the inner circle of Ethereum cabal, but I even go back to their acquisition of Hermes way back, like they've been focusing on zero knowledge proofs for quite a bit of time. And I have a lot of respect for them, to be honest. I would preface, maybe you don't count Ripple and what they did last year and the amount of acquisitions that they've done as directly like a chain doing it. But I think Ripple probably is the first in my book, like in terms of how
Monad also acquired a business last year as well. Yeah. So there's been a few others.
Yeah, like there's been some acquisitions. I think I sort of called it last year. Like it just makes no sense to not be using these treasuries to solve the biggest problem that we have, which is finding demand. I think the strategy of both Ripple and Polygon deserve a lot of probably the sharpest to date. So we'll see. Silence on the token and the value accrual there, but it's sitting at like 1.3 billion fully diluted. I wonder how they
traded up a lot on the news, right?
Did it?
Yeah. I think it's been doing quite well.
Okay, it's down today, but yeah, I guess. Yeah, I think it.
Let's see.
Not really. I mean, maybe I'm seeing last 7 days. Last 7 days down 13%. Polygon.
It's
they announced it on the 13th, and
oh god.
Okay, can you guys see this? It's the 5th best performing token on the year. right now.
Yeah, but that is like we outperformed the market, but we're still down 40%. Okay. Yeah.
No, I mean, it's up 24% this year. Everything else is
Take
not.
it. We'll take it.
We'll
How's
take it.
Figured on this topic? How's Figure doing, by the way? Just go back
Figure.
to
Why? Were you long or short Figure?
No, it's one of those that like when I go to traditional events, it is
Figure's
something
up
that
40% the last month. 100% in the last 6 months.
Yeah, it comes up in the conversation again. Talk about long. If stablecoins were the hottest, the second hottest, or now the hottest is tokenization. It's everywhere, right? Figure, I think. Again, you talk about not betting against Mike, like Belshi. I don't think it's
don't
wise.
bet against Cagney. Yeah.
You shouldn't bet against Cagney. I think he has it. He's very in his communication. You read the S1. He's like forthcoming. He's like, hey, we probably didn't have the best strategy for provenance, but like I could tell you, I think they're very focused on like now that they found a wedge with HELOCs, what else they can do. Yeah. So it's a company that I'm paying a lot of attention to. I don't have a position on it. It's just out of curiosity. I think they're worth paying attention to.
We've got Mike Cagney coming on the podcast soon, so we'll be sure to talk to him. Let's talk about I want to shift gears. Farcaster got acquired. So Farcaster, Andreessen backed company, had raised like $150 million, maybe 180 million at $1 billion valuation. Very hyped up, exciting, decentralized social platform. They are selling to, I think, one of the applications that had built on top of Farcaster, the Farcaster protocol, called Naynar, not to be confused with soccer player Neymar. I mean, many takes here, I think. I've got a lot of thoughts, but curious to hear how just when you guys saw this news come out. I mean, it comes in about a week after Aave parted ways or abandoned Lens, and someone else, Mask Network, I think, bought Lens. So it's kind of back to back the two most promising, probably decentralized social experiments of the last couple of years are now shut down or have now been acquired. So what do you guys think about this?
I read Dan's post. Was it an acquisition or was it some sort of weird transaction here?
I mean, look, Naynar raised $14 million, I think, and Farcaster's raised $180 million. So there's something going on.
How does the fish eat the whale here?
The fish ate the whale. The fish ate the whale.
Great book, by the way. That's my content of the week. But anyway. I don't know how they funded this or how it was like they folded some assets. Maybe it was some sort of tax structuring deal here for folks. But it just, if anyone has details, I don't.
Rob, do you know?
Yeah.
I don't know the details of how the transaction was structured. I mean, I think my only main takeaway here is like, RIP Web3, 2021 to 2026. Right. And now, I think everyone's come to the understanding that what blockchains are good at and what they're not good at. And, what allows for a better product and how do people build better product is on blockchains. It's probably not going to be social. It's probably going to be financial applications.
Capital markets. Yeah.
Yeah. And so I think
or if it is social, it starts first with financialization and then you stem into maybe a little bit more social.
Well, yeah, like Polymarket is a social platform. People talk about Polymarket when they're on Polymarket, but it's social with a financial aspect to it, right? I mean the Farcaster guys, I think Dan announced, what was it, only 2 weeks ago, that they were like going to focus on trading now, right? And so like they had already given up on it, and so I don't know if this deal was already in the works then. I would have assumed it was, considering how close it was, but we're starting to see clearly an understanding and a lot of consolidation around the ideas that people know are working.
Also comes at a time where crypto Twitter's dead.
Yeah, I mean, Nikita's trying to kill it. Public enemy number one.
Do you guys think decentralized social is dead? Like, Rob, would you even consider funding one of these? Santi, would you invest?
We have never funded decentralized social business because we've never believed in it. And I definitely am not changing my mind today. So listen, we fund really good entrepreneurs. So I never say never to anything. If an entrepreneur came to me who I thought was incredible and said, hey, listen, I have an idea. It's kind of wacky. I want to do something in social. Would I potentially fund it if I thought that entrepreneur was great? Sure. Is that a category where I'm actively looking to see deals and I want to talk to entrepreneurs building there? No.
I was talking to the other obvious category here is, so I was an investor in Lens, more so like, relationship and a long time Aave, supporter and whatnot. I sized it appropriately, I would say. I think the category is tough. Like gaming is an example. I was talking to someone the other day about it. Like, look, I made a number of investments in gaming. Some of them did phenomenally well, others that did not. The category as a whole has come down, and it's a time where like it's grave dancing. It's like you should have never invested in this. I would say it pays to have an open mind. If the technology evolves, because prediction markets were like this, like in 2020, in 2019, 2018, like after Augur died, and even Gnosis, like everyone was like discounting prediction markets, and then Shane comes along. You needed to have like an unwavering founder, but also you needed to have stable coins, because without stable coins, prediction markets don't work. You can't do betting without a stable unit of account. So it pays to re-underwrite the thesis under new environment. You could argue, is there going to be a new environment, like a higher throughput blockchain or something? I don't really know if it's going to be a technological breakthrough. But gaming, for instance, it's like you have to, I think, tease out like why is gaming not worked? Like Axie, you could argue Axie was more like DeFi with a veneer of gaming, but it wasn't really fun to play. So therefore, you can't call it a game. It's kind of like DeFi. It's like yield farming, like yams. That was fucking fun. You didn't have to learn anything. You just have to click 2 buttons and you would be, farming. Axie required a little bit more work, and so at some point, I didn't have enough supply sinks. But also you have to consider like gaming as a category outside of Web3 is also in a really tough spot. Like the fast casual category is kind of dead. There's only very few games that like look at Zynga stock crushed. Like unless you're like Grand Theft Auto, Call of Duty, and maybe one other 2 franchises, you're basically incinerated money. It's kind of like movies, unlike Rob, who's like investing in GoFundMe campaigns for movies. Most people don't make money on the category. So I want to like I think you got to contextualize it. I don't think social, like what do you call it? Decentralized social is dead. I think we got to probably rethink of how you get to a network, a social network. And I think the go-to-market just was broken, didn't work for a variety of reasons. You ran out of money. But I would probably be a bit more aggressive, which is I'm probably going to fund another decentralized social application in the next 5 years. And I hope it kind of works because, and it may be that it stems out of something that already exists, but who knows?
Yeah. I mean, you shouldn't, at some point, some of these things will probably work, just like a lot of the tokenization stuff is working now. But, you guys remember all the 2017, 2018, 2019, like ridiculous. I had basically written off, remember security tokens, STOs and Harbor, if you guys remember Harbor.
Harbor.
BitGo ended up buying Harbor. Yeah, it was just like a wasteland of company. And now it's the hottest thing. Now it's the reason BitGo is going public. So,
dude, also, I mean, forget about decentralized social. Social as a category is also really hard, like gaming. Like it's
just hard. Remember Vine? Did you guys ever use Vine?
Yeah,
like,
of course.
Remember if you wrote off short form video after Vine kind of had like a failed exit, then you don't get TikTok.
Yeah, exactly. So. Yeah. It's
all
tough.
right, folks. Anything else? Any other news we missed? New York Stock Exchange launched their tokenized platform. Gusto. We actually used to use Gusto. It's an HR platform. They're rolling out stablecoin payments. Deal did the same. I thought Interactive Brokers had some interesting comments around prediction markets. Rob, you mentioned that. Bermuda is fully moving on chain with Coinbase and Circle, trying to become the first first fully on chain national economy. I thought that was interesting. Both Larry Fink and Trump mentioned crypto at the World Economic Forum. So,
the Bermuda.
Larry Fink's comments were incredible.
Larry Fink's comments were amazing. Rob, do you?
Yeah.
I don't know if you have the tweet pulled or his talk pulled up, but
I don't.
He said, I can try to find it quickly.
I mean, he essentially said that every single country on Earth should be focused on bringing all assets on blockchains, coordinating across a single blockchain, tokenization, stable coins. He was basically saying right now, the largest economies in the world are trailing Brazil and India. And this should be a national priority for all of us here at the World Economic Forum, because it'll make it, it'll create GDP. It'll make it easier for us to, trade cross border. It'll reduce the amount of inefficiency that exists in the market, and it allows for less fraud. Allows for less waste, essentially. And he was like, everybody should be doing this. It should be what you're focused on right now. And for him to go up there at the World Economic Forum and say that so explicitly, it still feels like people do not understand the gravity of what is happening in that part of the market, just because whatever, some meme coin's not going up 100x.
2 years ago that would have been taboo. Now it's surreal. Like, it's just the largest financial company in the world doing that, right? Or one of the largest.
Yeah.
Crazy.
Yeah. Good place to end it, with hope.
Content of the week. Santi, you're talking bananas. I know that book.
Dude. So apparently, I'm going to pivot, guys. I'm going to go. Bananas are fantastic businesses. I mean, my God, I've been surprised. They grow extremely quickly. They grow so fast that they make noise in the middle of the night, and they produce year round. It's a crop that is the yield is very high. So anyways, people should go read this book.
But they spoil too quickly, and that means there's opportunity. And with Samuel, what's his name? Zamurai or something?
Z Murray.
Oh, anyway. I think it's one of the best. It's like that and Shoe Dog are like two of the best entrepreneurial books of all time.
100%. People should go read it. It's The Fish That Ate the Whale, how this guy basically built a banana empire. I really enjoyed the book. Again, I'm mostly off social media these days. I'm just reading old school books. History does not repeat itself, but it definitely rhymes. It's just a great story about just finding it checks a lot of the box. It's a commodity industry. It's tough, but a guy built incredible value on like building a better supply chain for obviously a perishable good. So anyways, great book.
He would quick preview of it for people who haven't listened is banana companies at the time would when bananas would spoil, because they grow really quickly, but they also spoil quickly and they get too ripe. So he would take the ones that were about to be too ripe and he'd take them and then go resell them. And he started this whole banana empire. And he ended up overthrowing the government of was it Nicaragua?
It was Nicaragua. He just I mean he's kind of was the guy that like coined banana countries, and like the US, the CIA got involved. The US
crazy story.
Yeah, it's pretty awesome story.
Rob, what do you got for us?
So I just want to preface this. Today's actually a big day, which I think you guys don't realize. This is a really important day for me. Today was Oscar noms day. So all of the Oscar noms came out this morning, and I hold a big Oscars party every year. I really enjoy the Oscars.
Thank you for the invite.
Yeah. Well, they haven't gone out yet.
Look at my spam folder.
Thank you for the invite.
They're not till March 15th. So, check it out. Maybe you'll get invited if you are nicer to me on the next pod. But I'm going to call out an older movie because I don't know if anyone here has seen Sinners. It came out like last February, but it shattered the record for the most Oscar nominations ever.
Wow.
And it's it's a movie. Michael B. Jordan's in it. He plays kind of these twin brothers who are, I think it's supposed to be set in the 20s, and they come back to their hometown in the South from Chicago, and they try to set up kind of a like a dance hall, kind of bar area during the Prohibition era, and they it's like an action movie. There's I won't spoil it if you haven't seen it. A really good movie. For that type of movie to like shatter like Titanic for the amount of Oscar nominations, it's got 16. It's actually crazy.
So I want to be nostalgic. I want to be nostalgic about old movies, but is there this phenomenon that it's always like, is music not getting better? And you're nostalgic about Avicii, and like nothing ever came close to Avicii. Like, as we grow older, do we grow nostalgic, and we have an opinion that like new content is just not as good? Or is the voting just gone wrong? Where like, do you actually think it's better?
Is Sinners better than Titanic?
I actually rewatched Titanic on a airplane recently, I hadn't seen it in a while.
Did you
Titanic is still good. No, I didn't cry. But every time I watch Titanic, I look at the end and I'm like, why didn't she like try to make room for him on the door? Like, why did she let him stay in the water? Like,
Yeah.
what is happening? But no, Titanic is still great. It's still a very good movie. James Cameron, shout out. Like, nobody has made more money and by like multiples than he has in Hollywood. But listen, I really liked Sinners. I did not think it would do this. I mean, also Formula One, the F1 the movie got a Best Picture nom. Which
What?
I also really enjoyed that.
That's a horrible. That's a horrible take. That was a trash.
It did get it got a Best Picture nom.
That was a trash. That was a trash picture. That was a trash film.
Discussion resolved. The committee and the nominations are. This
is my point. There was a lot of kind of weird stuff relative to what the Academy was like previously that's been happening, and so I think it'll be an interesting Oscars. I think we'll see, at the Grammys, or was it the Grammys, or was it the Golden Globes? We saw Polymarket predictions at the Golden Globes. Hopefully we see them at the Oscars too. So that's my content of the week is go watch Sinners, historic Oscar nominations, 16 of them. It's great.
Who did you see Marty Supreme?
I did.
Or did we talk about this 2 episodes ago? Yeah.
No, I don't think we did, because I saw it and I expected to like it a lot. And then I just could not like a single character. Every character in that movie is just a terrible person and like completely unlikable. And because of that, I just couldn't, I just thought it wasn't as believable and I didn't relate to it as much as I would have liked.
Interesting. Isn't Kevin O'Leary in it? You didn't like Kevin?
It's good for Kevin. He's got, multiple sources of income. He's trying to, maybe things are tough in Mr. Wonderful land. So.
Yeah, maybe not so wonderful.
You're going to get people to shout at you across the table on dinners. All right. So this is our cue to start it.
Yeah. I've got a podcast, Toby, on David Senra. Amazing episode. Amazing episode. There's also a podcast called Step Change, which is they do these like 4-hour deep dives. It's in the same way, I don't know if you guys like Acquired, but in the same way that Acquired does these like huge deep dives into companies, they do huge deep dives into industries and sectors. So they did one on coal. I realized I knew very little about coal. It's like 5 hours on coal, the whole history of coal. Thought that was good. And then there's one on data centers that they came out with a couple months ago that I've heard is fantastic. It's looking at it now, 4.5 hours on data centers. So
good stuff.
All right, folks. Good chatting. We have really good episodes coming out. We just dropped, we did one with the Lighter founder, Vlad. We've got Rain. We actually have 3 coming out. I forgot I'm recording with Belshi tomorrow. So we've got Belshi coming out on Monday.
Ask him about my opinion. See what he says.
I was going to say, hopefully he doesn't listen to
all starts making a whole lot of sense now.
I was going to say, hopefully he doesn't listen to this episode. So we've got Belshi coming out on Monday. Then we've got the founder of Rain, who Rob has been mentioning many times, really hot, one of the fastest growing probably fintechs in the world right now. Unbelievable conversation with their CTO. And then we've got a really good episode on vaults with probably 2 of the best people to talk vaults. So very excited about that. Listen on Monday, and we'll see you next week for the Friday Roundup.
All right.
Thanks, guys.
Cheers, folks.
Thanks, guys.